talk a little bit about our relationship with Dr. Thomas Carr. His is an add-on that we worked very hard on. In fact, I remember Thomas actually emailed me copies of his best-selling books before I moved to California. We finally got done with his product and released it earlier this year, maybe like a month or two ago. So it's something that we've been working on for quite some time. I don't know if you're familiar with Dr. Carr or his books or his work, but it was very, very impressive to me. And as you know, when I get impressed with something, I want to get it into MetaStock. And it was definitely a labor of love. Tom and I worked really, really, really thoroughly through kind of both of the books that he released, and we made them available for MetaStock. It took us a lot of time to fine-tune everything and make sure it was matching with the strategies in his book and all that kind of stuff. And if I'm going to invest some time into a project like this, I'm going to believe in the product, and we're also going to take our time and do it right. So with all that being said, I brought Dr. Carr here today. I want him to talk to you a little bit about like his work and what he looks for in stocks and strategies and all of that kind of good stuff. So without further ado, I'm going to, as I always say, get out of the way. Dr. Carr, do you want to come on?
Hi, Jeff. Everyone hear me okay? Thank you for that introduction, and it's certainly a pleasure to be here with you all tonight. Appreciate your taking time out to hear a little bit from me about this exciting new product from MetaStock. And as Jeff indicated, it certainly was a longish labor of love. We had to go back and forth many, many times, perfecting and tweaking and making sure all the parameters were just right. But we now have a really solid product that I've been using myself in my own trading, and a number of my own clients have been using, and getting a lot of great feedback by email on this product. I've had so many emails over the years asking me, just exactly how do you scan for stocks that fit the systems that you've listed in your books, and I've tried to make that clear in my books, exactly what each setup is looking for. But even then, there's always a bit of a translation problem from the book to the scanning software, whatever you happen to be using. And this takes that problem out because it's already been done for you. So there's no need for me to answer so many emails. I just say, go to MetaStock, and you've got it all right there for you. So I just want to thank you all for coming tonight. Thank you, Jeff, for that nice welcome. And looking forward to sharing some time with you tonight. We'll take about, 45 minutes or so to go over a little bit about what is in the Trend Trading Toolkit. And I'm going to be highlighting tonight one of its scans, a bullish scan, that very nicely fits the current market. Obviously, we are in a bullish market, and you want to be using a system that matches the market type, and we're going to be doing that tonight. I'm going to be leaving you tonight also with a stock that you can actually buy at the open tomorrow after you've done your own due diligence. So we'll hold that off for the end. So what we're going to be covering tonight, first I just want to give you a little bit of my own story. Some of you I know here tonight are subscribers of mine, maybe private coaching clients of mine, and you know a little bit more about my story. Maybe you read Trend Trading for a Living in that introductory chapter where I outlined how I got into the trading of stocks. I'm not a finance professional by education. I, for many, many years, in fact 16 years, was a professor of philosophy and religious studies to undergraduate students. And I recently resigned from that position in order to devote full time to trading. In 2002, I launched my first daily market letter called the Trend Trade Letter. And we have published daily stock picks every market day since then. It's still going strong now in its 11th year. It's up around 2,000% return on asset. And then in 2007, I launched my second market letter called the ETF Reversal Letter. This has become my most popular and most profitable letter. It's up, closer to 5,000% now, 4,700%. And that trades a number of volatile liquid ETFs, both long and short. And then in 2008, Trend Trading for a Living came out, published by McGraw-Hill. And much to my delight, and I think maybe to the publisher's surprise, it became kind of a bestseller. It's been translated into 3 different languages and is coming out with a second edition fairly soon. In 2010, I was asked by McGraw-Hill to come out with a follow-up volume. So I published, or I wrote and published Micro Trend Trading with McGraw-Hill, and that's focused more on intraday day trading sort of setups. And then I also started the Cheap Stocks letter that same year, and in the 3 years of its publication, it's up about 300%. All of the trades, by the way, are in our performance page of the website. The website that we use is befriendthetrend.com. And if you click on the performance link, you'll get a list of every trade we've published since inception back in 2002 with entry price and exit price. Every time we publish a new stock pick, we always give you an exact entry price, a place to place your stop loss, and an exit price if it goes in your favor. In 2012, I launched a small hedge fund for a small group of private investors called the 818 Fund. And we're still going strong with some new products coming online very shortly. Today we offer a number of webinars. I'm no longer taking private coaching clients. I will in the near future open that up again, but I do a lot of private coaching with clients. And we'll be launching very soon a managed account service where I will be trading my private trading account, and your account would be attached to mine, so whatever I'm putting on, you would put on as well. But if you're interested in any of that, you can just email me at drstoxx@befriendthetrend.com. So what are we going to do tonight? Tonight we're going to do 3 things here. We're going to first introduce you to the Trend Trading Toolkit that Jeff mentioned, available in MetaStock and some of its features. Then we're going to use that toolkit to set up a watch list of the best trading stocks, the best kinds of stocks to trade. I'll show you how that's done. Thirdly, we're going to highlight one of the explorations of the add-on. It's called the Blue Sky Breakout add-on, or exploration rather, and that's a perfect setup for the market that we're currently in. We're in a market, as everyone knows, that is making new highs as of May 2013. If you're watching this video a year from now, you may not be saying that, but presently we're in a bull market that is trading at new highs, and so we want to be looking for stocks that are breaking out. And I'll show you exactly how to find the best candidates for this market. And then lastly, I'm going to leave you with a stock that you can consider buying tomorrow, and I'll show you which one that is. So first of all, let's talk a little bit about how to set up a technical watch list using the Trend Trading Toolkit add-on. We have 3 goals when we're setting up a watch list of this sort. 3 things that we want this watch list of stocks to have in common. We're looking for about 40 to 60 stocks that fit these 3 parameters. 1, they need to be trading at above average daily trading volume. If you take all the publicly offered stocks available for trading, the average volume daily comes to about 93,000 shares per day. So we want to look for stocks that are above that, perhaps 100,000, 200,000 per day, shares per day, so fairly liquid stocks. Secondly, we want our stocks to be volatile. So we're looking for stocks that trade above a 1.0 beta. Beta is the measurement of the degree of volatility above or below the volatility of the S&P 500. So a 1 beta is a stock that trades to the same volatility as the S&P 500. And we're looking for stocks that are trading 2 or 3 times that, sometimes more than that. And we're looking for stocks that are priced in what I call the sweet spot of price, about the $10 to $50 range. I call that the sweet spot of price because if you look at a risk to reward ratio of profitable trade setups, at least the ones that I trade, you're looking at stocks that are very much in that range. Stocks that are higher priced tend to have lower reward, and stocks below $10 tend to carry greater risk, but the $10 to $50 range is a nice sweet spot. So there are 3 easy steps to set up a watch list like this. You can build your own scan if you're familiar with the coding language of MetaStock, which is, as some of you probably know, not the easiest language to learn right off the bat, but it is certainly learnable. But the easier thing to do would simply be to use the Prefilter Hibata scan, which is in part of the Trend Trading Toolkit. So you've got a simple scan right there. You click it once, it runs a scan of whatever sub-list of stocks you want to search through. You can search through the S&P 500, you can search through all the optionable stocks, you can search through all US stocks, etc., etc. You can even search just ETFs and a variety of other subsets. Secondly, then you want to create a template for the charts that you'll be looking at of each of these stocks that make it into your watch list. And you'll want to make sure that you have a number of key parameters and indicators on there. The simplest thing to do is, once you have your list of stocks, is just apply the Trend Trading Toolkit's standard chart template. So a single click of the mouse will put a standard chart, which is a candlestick chart with volume and MACD and stochastics. It'll put that on every chart in your watch list, so you're set to go. And then thirdly, what you would probably be doing on a daily basis is scanning through the charts in that watch list, looking at each one for specific technical setups. This is a discipline that I've been doing ever since I launched my first newsletter back in 2002. I update my watch list on a monthly basis. You can do it more frequently or less frequently, but I usually do mine once a month. And then each evening before the market opens, I scan through those 40, 50, 60 stocks looking for technical setups. And I like to do that because although there are easier ways of finding setups, as you'll see in a moment, once you are eyeballing these very volatile liquid stocks, all priced within the $10 to $50 sweet spot range, you're going to get a very good feeling for them. You're going to see the same stocks appear month after month after month, of course. You're going to get a very good feeling for them. You're going to sort of intuit their levels of support and resistance, and you'll have a better connection with them, and they'll just become very familiar to you. And so your ability to trade them, I think, is stronger as a result. In addition, it's an extremely good education in technical analysis to mark stocks on the watch list that you think are making technical setups, and then check back with them a week later, 2 weeks later, to see if your prediction came true. And that is invaluable education. And I always tell my private trading clients that this is the discipline you really need to learn. You need to learn the daily or nightly eyeballing of your watch list, and just make that a part of your routine. It's not going to be the easiest part of your routine, but it certainly needs to be part of your routine. But here's where it gets a little easier. Let me back up a little bit and say, in the Trend Trading Toolkit, there is one of the explorations, as you'll see here, it's highlighted in blue, is the Prefilter Hibata watch list scan. And you would simply click on that, then you would apply that to a subset of stocks. I usually apply it to the optionable stocks, and then I will take the top 50 or so stocks that are trading at a high beta. So I'll rank them by beta and take the top 50 or so. And that's very easily done with this pre-filter scan. You don't have to code anything into MetaStock. That's already been done for you. Here is a result, a recent result. I think this was from a scan I did earlier this morning of charts stocks that fit that high beta filter. And I made a watch list of them, which is again very easily done. A couple clicks of the mouse and you're able to save all those charts into a watch list, which I named here the Prefilter Hibata scan for 5/8. That's today. And you can see there are 70 charts in that because I didn't weed out the lower beta ones, but that's usually what you'll get is anywhere between 40 and 70 or 80 charts. And if you get more than about 50 or 60, then I like to weed out some of the lower beta ones. Once you have run your pre-filter scan, you're going to see this dialog box come up, and this will allow you to apply the chart template to each stock in your watch list. And you would want, in this case, simply to apply the standard chart template, which I've done here. You'll see that highlighted. You can also apply any of the expert advisories. You're going to get 11 expert advisories in this add-on, which is a very large number. If you're not familiar with MetaStock, an expert advisory is an attachment that you can place on any chart, an entire watch list or a single chart at a time, and it will highlight specific setups both for the present bar and for any of the past bars. It will show you exactly where the setup triggered a signal to enter, and it will show you exactly where the setup would have exited with either a profit or a loss based on the stop loss. Now, once you have your watch list with the chart template applied, then your third discipline, as I mentioned, is to eyeball those charts each night. And a typical chart would look something like this. I've colorized it and added a few little bits and pieces here to make it fun, but you have the two moving averages, the 20 and the 50 overlaid. You have the volume bars down below that. You have the stochastics that are set at the Traders 5 periodicity. And at the bottom there you have the MACD, which is set at the default parameters. I've added in a trend line down below here. Let me get my little green arrow here. So I've added a trend line, and I added a resistance line up here to kind of show you where this is trading up there. And then I added some arrows to show you where some of the expert advisories would have signaled your entries. So the three black arrows here would have triggered signals using the pullback expert advisory, and the four green arrows would have triggered entry signals for the blue sky breakout expert advisory. And it's that particular setup, the blue sky breakout, that we're going to be looking at today. So let's look at the blue sky breakout. I ran this exploration earlier today, and this is the one setup that especially fits the present market that we're in. We are in a market that's making new highs. I heard it referred to, by the way, on CNBC the other day as the most hated bull market ever. And I'm not exactly sure why it was called that, but I think it mainly because no one can quite figure out why the market keeps going up. Is it because earnings have been great? Well, not really. Is it because our economy is strong? Well, not really. Is the jobs picture getting better and better? Well, not really. Is it the Fed pumping more and more money into the bond market? Well, maybe that's a part of it. Is it the global economy getting stronger? Well, there are pockets of strength here and there, but really not universally. So no one can quite figure out why the market keeps going up, but it certainly does. It's one of those markets that no one quite thinks will ever go up anymore, and that's a very good reason for it to continue going up. As you probably know, bull markets only come to an end when everybody thinks they will never end, and we're not at that point yet. So, okay, all that is to say that in a strong bull market making new highs, you want to trade a breakout setup, and you have a bullish and a bearish version of this. You can see the bearish version of the same setup right here, the blue sea breakdown, but we're going to focus on the blue sky breakout setup. So I ran this scan earlier today, and I applied it to the watch list that I had set up from earlier in the day and came up with a number of possible candidates. Now, I'm going to tell you that usually in a bull market like this, when you run the blue sky breakout, you're going to get more candidates coming through the filter than you can trade. And there's no sense in putting a little bit of money into every one of them. What you will need to do from the point of running the scan to actually putting on a trade is to weed your bigger watch list down to a very narrow list. And I'm going to show you two additional steps you can take to do just that. And we're going to pull the best looking candidate out from the list of stocks that came up. There were about 7 stocks that came through the filter from those 70 stocks on the watch list. And one of them looks, in my opinion, to be the best of the 7. And then I'm going to highlight one stock that doesn't look so good, even though it did pass the filter, and I'll tell you why. So here's one that I think looks like the best possible candidate. And this is the one that if you are trading tomorrow morning, you might consider doing a little bit of due diligence on it tonight, see if you agree with my assessment, and if you're inclined, you can put on a position in this tomorrow. Just a disclaimer, I did buy some shares in this stock today because it passed through the filter yesterday, and I did more due diligence on it today, and it looked like a decent candidate. So now the blue sky breakout trades stocks that are making new price highs over the past 40 trading days, which is 2 months of calendar time minimum. So it can be a new high, 6-month high, it can be a new annual high, but it has to be at least a new 2-month high. And you can see on this chart right here that we certainly have a new breakout. I can get the little green arrow to work. Okay, well anyway, I can't get the green arrow to work, but you will see just in the upper right hand corner of this chart, it's circled in black, the price breaking out above the resistance line there. What I also like about this chart is that you have a nice double bottom. You can see that in the price formation, which gives you a pivot point in early April, and the lower left-hand bottom at the beginning of April, and the right-hand bottom in the middle of April. And in addition to that, in the on-balance volume indicator, you have a higher low underneath the right-hand bottom of the price chart, which is, as some of you know, bullish divergence, and that's something I very much like to see. In just about any setup, I like to see divergence in the indicators when you're looking at a lower low. In this case, you have a lower price low coupled with a lower indicator low. So we have a new price high, and coupled with that, for a true blue sky breakout, you also need a new high in the on-balance volume indicator. And that also needs to be a new 2-month high at least. You can see here that you're actually getting a new multi-month high in the on-balance volume indicator. On-balance volume is a very simple indicator. It simply adds the amount of shares that were traded that day to a running total. It adds those shares if it was an up day, and it subtracts the shares if it was a down day. So on-balance volume will trend higher or lower, not so much depending on what price is doing, but depending on what the buyers and sellers are doing. And of course, as you know, it's buyers and sellers who move the price. On-balance volume indicator is not a lagging indicator. It tends to keep pace with price quite nicely. And there are even times when it leads the price, in which case it's an excellent indicator. So here it is showing a new breakout, the on-balance volume. That confirms that we have a genuine blue sky breakout, and so this is ready to go. But we have 7 or 8 candidates that are ready to go, and I don't want to trade all of them. So which ones are the best? Well, let me see if I can. Here we have the price breakout there, and down here we have the on balance volume new high. Okay, and then we can also see the bullish divergence here in the on balance volume indicator. One other thing I want to point out about this chart before we move on is that when you have a double bottom, or just about any consolidation formation like this, you have an automatic price target of where you expect price to travel on the, in this case, on the upside. And to do that, you simply take the pivot high, which is here at about 24, and subtract that from the pivot low, which is down here around 21. You have a 3-point spread. You add the 3-point spread to the breakout, which is 24, and you get 27. So your price target for this particular setup is 27. It's trading in the middle 24s right now, so that's a 2.5-point spread. This is not a hugely volatile stock, but it was, of the 7 that showed up today, it was one of the better setups. How did I know that this was one of the best of the 7? Well, let me show you the next slide. The one thing I want to do as an additional step to confirm a blue sky breakout is to make sure that I'm also getting a breakout, a new 2-month breakout minimum in the MACD indicator. The MACD indicator is a indicator based on simple and exponential moving averages. It is a trend indicator, so it indicates or tells you how strong a particular price trend is. And because price is making a new high here, we also want to see the trend indicator, the MACD, making a new price high. If MACD is not making a new price high, if it's lagging price, that indicates some bearish divergence. That would be a red flag, and it would indicate to me that this is a chart I would probably pass on. But we don't have to pass on this one because, as you can see here, we have a new high in the MACD, and it's more than a 2-month high. It's about a 2.5 to 3-month high. So that's all we need to see. That's very good. Just as a side tip, I don't know if any of you follow Elliott wave theory. I'm not very big on it myself, but you probably know then that a new MACD high usually indicates the 3rd wave of a 5-wave trend. And so what we would be expecting here is perhaps some price consolidation indicating the 4th wave or pullback wave before attaining a new high in the 5th and final wave of this particular trend. And that 5th and final wave should take us to 27. That's what we're expecting from this particular setup. The nice thing about this setup is that I'll show you how to set stop losses in a minute, but if you set your own stop loss, you can set that very nicely here by putting it just underneath the lows of this breakout range here. So you have maybe somewhere around the low 23.23 would be a pretty decent place for the stop loss. You could also place it just below the 50 period moving average, which would get you in at about 22.75. Both of those are fairly low risk stop losses for a chart that's expected to bring back about 260, 270 to hit its target. Now there's one final step that you can take to ensure that this is the best of the candidates that pass the filter, and that is to draw a long-term trend line. And for this, I've scrolled back in the MetaStock chart. I want to show you a couple of things going on here, but let's first look at this long-term trend line, which is right here. We go back and we put this trend line over the tops of the pivot highs, and I like to see 3 pivots to really establish a decent trend line, and that's what we have here. Here's one pivot, second pivot, and then a 3rd pivot. So we put the trend line over the tops of those. That gives us our long-term trend line. Now, for me, this is a tradable blue sky breakout if it has passed the filter, which it's done, if you're seeing a new MACD high, which we saw, and thirdly, if there is still room beneath that trend line for it to move. I don't want to see that trend line too close to my signal to enter, because that line is likely to add some resistance to my trade, and I don't want any resistance. I want this to be a genuine blue sky breakout, so blue sky above. So anything that I can do to remove one level of resistance, so much the better. So here we have the signal right about there, and we can see from that point to where we would extend the trend line up here, we've got a fair amount of space left. And if we figure the 27 is right about there where price will likely meet that trend line, then we have again some confirmation that this is indeed a genuine double bottom pattern. It's a genuine blue sky breakout, all kinds of good stuff going on with this. Now I want to point out one more thing before we move on. I've added the expert advisory from the Trend Trading Toolkit add-on for the blue sky breakout to this particular chart. This is a longer term chart, and you can see I've highlighted them in this blue circle here, this blue rectangle. There are, gosh, I can't count them without my reading glasses, but 7 or 8 blue sky breakout trading signals. All of those are very good signals because they came through the filter, they show new OBV highs. I haven't checked MACD to determine whether MACD is making new highs, but I suspect that it is. But what would hold me back from trading some of these later signals up here is the fact that now we're getting very close to that long-term trend line. And again, that's going to add a layer of resistance. You can see as soon as it tagged the trend line, it sold off quite sharply. So you don't want to be, the last guy in. The signals that were obviously the best ones were down here earlier on in that trend. The same is true here. I suspect we're going to get a string of blue sky breakout signals over here off to the right edge of the chart as we go forward, as this price ramps up past the double bottom breakout, past the blue sky breakout, the 2-month breakout. But I don't want to be entering at that last signal. Once we get up close to a long-term trend line, that's where I would pass on this. You're going to see an example of that in just a moment. The last thing I want to say is that if you're an options trader and you're looking at a series of blue sky breakouts like this series here, this nice series, these are tagged to a chart that went nearly vertical in a short period of time, looking at about a month of trading right there. And while this isn't a wildly volatile chart, it illustrates the kind of thing that you can really latch onto with the blue sky breakout. But a lot of other charts will not ramp up so quickly. They'll hit a new high, and then they'll consolidate for maybe a week or two, and then they'll hit another high and consolidate. And those kind of charts, if you're an options trader, are ideal for doing something like playing covered calls, which is a more conservative thing, because during those consolidation periods after the new high, you're going to see a lot of premium deflate from your call option. And if you play near-term, at-the-money calls, you sell them short along with your shares, you're going to get some nice added premium. You're going to add some really nice return to your position. And if you're a little more risk-friendly, then you can also consider selling naked puts. If you do it carefully, it's really not as dangerous a strategy as it sounds. And you would sell short a put at the next lowest strike price and capture that premium, and even if the stock trades sideways, it will turn out to be a profitable position for you. So anyway, there are different ways you can play this blue sky breakout, but we're just concerned right now with playing them with shares. So let's move on and look at one last thing here. Once you attach your expert advisory to a chart that has a signal on it, or a chart that doesn't have a signal, because the expert advisory will show you past signals, you will have access to some commentary on that position. And in all the commentaries of all the different expert advisories that come with this add-on package, you're going to get exactly where to enter the stock. You're going to get the price you're going to get a couple of options of where to put your stop loss, and you're going to get a couple of options of where to exit the trade on a profit, where to put your target exit order. What I've highlighted here are the average true range stop loss, which is at 2267. That coincides nicely with the 50-period moving average, as we saw, which is somewhere around 2275. So it's just under that, which gives me an added layer of support in case price does pull back a bit. So I like that stop loss. And then I have two target exit options here. There's the percentage target exit, and there's the ATR target exit. And the ATR target exit is set right at 27, which matches both that trend line and the price pattern that I showed you, the double bottom price pattern. So that would be the exit that I would choose. You can select either the percentage stop loss and target exit, or the ATR stop loss and target exit, whichever one seems to you to have the best risk-reward ratio. You can even mix. You can choose the ATR for the stop loss and the percentage for the target exit. But I'm just pointing out here that you don't have to guess where to put your stop loss or target exit. In every one of the systems, you're going to get exact entry price, stop loss price, and target exit price, which takes a lot of the second guessing, a lot of the subjectivity out of trading, which I think is very nice. Now, here's a candidate that came through the filter this morning. It certainly is in an uptrend. It certainly is a valid blue sky breakout, because we do have, as you can see right here, we do have a new price high. It's at least a 20-month high. In fact, a 2-month high, and in fact, it's quite a bit more than that. And we also have, I don't have OBV on this particular chart, but we do have a fresh high in OBV. But there are a couple of problems with this. For one, if you look down here at the MACD, in order to make a new 2-month high, should be breaking through this line right there that I've drawn over the top. There's the recent high, and it should be breaking through the line right there to confirm the momentum of this upswing, and it's not. We're seeing some bearish divergence beginning to work its way into the chart. And that's something you don't want to see. Secondly, I've drawn a trend line over the tops of the most recent pivot highs, and we can see right here at the far right edge that we're right up against that. That's going to pose some resistance. So CMA was, of all the 7 candidates that came through the screen this morning, this is actually looking the worst. And it's not surprising that it also got a downgrade this morning, which explains that bearish gap down that it took this morning. It did trade back up to about the close of the yesterday's trading, but it's not a real good looking chart at this point, not a healthy risk-reward ratio. So I'm going to pass on CMA. I wouldn't go so far as to say that it's a shortable candidate. I don't think it is, but I certainly wouldn't want to be long CMA at this point. If I were already long, I would use these indicators as a place to take some profit off the table. Now, one last thing I want to point out before we close here is that one final thing you can do, and you can apply this to just about any of the 13 explorations that we have, the 11 expert advisories that we have in this incredible add-on. One of the last things you can do, and something that I'm just now beginning to teach my private clients, and I'll be including a bit of this in a third book that I'm working on. It's due at the end of next month, so it'll be out by the end of the year, is to apply a fundamentals grid to your short list of stocks. So you run your blue sky breakout filter, you come up with, let's say, 20 stocks, which you might get if, in fact, you would certainly get that. You probably would get more than that if you ran this filter, you ran this exploration on the optionable stocks, let's say, or all the NASDAQ stocks. You're going to come up with a very large short list. You whittle that short list down to, let's say, 15 stocks, because those are the stocks that are making new MACD highs, and they're nowhere near a long-term trend line for resistance. Well, how do you then whittle down to 15 to the best tradable setups? One of the things you can do, and I know this is, maybe not familiar territory for a number of you, is you can apply a fundamentals grid to those 15 stocks. I've devised my own grid, which I haven't taught publicly yet, but I'm beginning now to teach to some of my long-term private clients, and I'll be talking a little bit more about this in my upcoming book. 9 fundamental indicators that I give a numerical value to. Either the stock gets a 0, a 1, or a 2, depending on whether it's nowhere near where it should be, or it's right about where it should be, or it's really strong in that particular fundamental parameter. Gets a 0, 1, or 2, and then I total up those numbers and I get a grade. I'm a professor, right? So I'm used to giving papers and exams grades, and here's a way to give a stocks a certain grade. By the way, this is based loosely on the work of a man named Joseph Piotrowski, who may be familiar to you if you've done any sort of work in the history of fundamental analysis. He was a professor of finance, in fact may still be a professor of finance at the University of Chicago. Back in the 1970s, he published a paper, a landmark paper that has been much debated ever since it was published, in which he outlined 9 parameters that mark a kind of line in the sand for stocks and whether they are fundamentally sound or fundamentally problematic. The stocks that came in the lower end of his 9-point scale were stocks that always underperformed the market, and stocks that rose to the top of his 9-point list were stocks that always outperformed the market. In fact, stocks that got 0, 1, or 2 were stocks usually on the way to bankruptcy. So it's a very, very sound grading system. It's called the Piotrowski F-score, or F-rank. And I haven't used his same parameters because some of them are kind of, quite difficult to get the data for. But I've developed my own system based loosely on that. And so anyway, long story short, I wanted to show you how this works in actual practice. A few months ago, this was back in November of last year, I ran a long scan and a short scan, and I came up with 4 candidates in each. And I determined the best 2 candidates on the long side and the worst 2 candidates on the short side. And of course you can see on the long side the best 2 candidates here are DY and OXM, and on the short side the 2 worst candidates are MT and CLNE. Some of you may know these stocks, Oxford Marine and McHale Steel and Clean Energy and so on. But anyway, let's see what happened to those 4 stocks over time going forward. Here is a chart of OXM, and you can see that over the next 4 months after that scan was done, it trended modestly up. OXM is currently trading at, let's see, I have a note here, around 61, almost 62. So it's quite a bit higher than it was here at the right edge. And then DY is currently trading at around 22. Here it's trading up around 19, or 18 rather. I need my glasses. But you can see the nice uptrend that it's showing there. Whereas the 2 that fared the worst fundamentally are these 2 charts here, CLNE and MT. MT really fell off a cliff. It traded as low as about 11 not too long ago. Anyway, so you can see that both of these did not do very well. So I just want to throw that out there as one further thing on the table you can do if you end up with a lot of charts to weed through. You certainly want to make sure you've got MACD confirmation of the breakout, which gives you the confidence you've got momentum on your side. Secondly, you want to make sure that it's nowhere near a resistance long-term trend line. And then if you still need to do further weeding out of your charts, the last thing you can do is apply a few fundamental parameters to the remaining candidates to weed out the best from the rest. All right, so that winds up our presentation. I just want to throw this one last thing out there, that anyone who is with us tonight is very welcome at my expense to take a 2-week trial of our 3 trading letters: the Trend Trade Letter, the ETF Reversal Letter, and the Cheap Stocks Letter. You're going to get access to all 3 for 2 weeks, free of charge. You will be logging in and signing on to a monthly recurring charge of $99 per month, or $199 per quarter if you'd prefer. We also have an annual fee that's quite a bit less than that too. But you can cancel at any time during your 2-week trial. There will be no further charge from that point on. And just to sweeten the deal, I'm going to throw in a couple of trading manuals that I've published. You're going to get the Stock Options Manual, which outlines everything you need to know to trade options on all of the 13 explorations that are included in the Trend Trading Toolkit. So you can use calls and puts or spreads to leverage your positions. And I'm also going to throw in a free manual, the BTT Max system, which I developed. It's a very simple moving average crossover system applied to an hourly chart. And there are a few more parameters than that, but it's a very, very profitable system when it works well. It doesn't always work because you can, as any moving average system, you can get some pretty choppy trading. But there are ways of weeding out the best candidates, and I tell you how to do that in the manual. And it's a system that can really crank out 3-digit annual returns from highly volatile stocks. If you're a high risk taker, it's a lot of fun to trade. So sign on for the 2-week trial. You'll get both of those manuals free of charge. They're yours to keep, whether or not you stay on with our 3 letters. You'll also have full access to our daily market commentary and the 3 letters, which are updated every night prior to the market open the next day. So I'm going to turn it over to Jeff. He can wrap things up a bit, and then I'll hang around. If you have a few questions for me, I'm happy to answer them. And let me just say in closing, you guys are great. You've paid a lot of good attention. I know I've probably threw a lot of stuff out at you, but feel free to ask or email me anytime, and I'm happy to answer your questions. Thank you very much.
All right, guys. I'd like to thank Tom for... Oh, Tom, mute your microphone for just a few minutes, if you would. That'll save a little bit of the squelch back. All right, guys. Just want to kind of recap in terms of really kind of spend maybe a couple minutes with you before Tom goes into Q&A, just to kind of explain to you exactly kind of what is included in the add-on. As you know, I've dealt with add-ons for MetaStock for 6 or 7 years, and I'd probably say this is one of the biggest ones. A lot of the work that we did, like I said, he sent me a copy of both of his books, and we actually went through and mechanically, meticulously built all of his systems into MetaStock. In fact, I think it's probably one of the largest add-ons that we've actually released. The nice thing is that since the add-on was so well defined, we were able to go in and technically define everything. We were able to go in and say, okay, out of the strategies that he discusses thoroughly in his books, I'd recommend you get his books because it's a great to have him with the add-on, but we were able to go in and very meticulously actually recreate what he's looking for in these best-selling books. So we're very, very happy about that. Just to kind of give you an idea of actually what's included in this thing, I've just made a list. I'm not going to read them all to you, but this is just the long explorations. There's about 5 or 6 of them that are talked about. In terms of the short setups, these are scans that'll help you find short setups based on what the market conditions are, and a long and a short one, a high beta filter scan. And with that, we also have all of the matching expert advisors, and we have a full expert advisor. What I mean by that is when you apply the expert advisor and when you get it on your chart, it's actually going to tell you specifically where your ATR stops should be or where your targets should be, and it gives you some suggestions. I'd recommend you play with them and kind of figure out which ones you like better. But we tried to get really, really specific in terms of identifying and explaining why those patterns occurred on the chart. If you can't tell, I'm extremely excited about this add-on, and I would say that it is very, very cheaply priced. I would encourage you to try it out. Okay, we also have a bunch of templates that are in there. This is all just kind of going in, and we really don't have the time today to actually talk about what each of the ones are doing. But notice at the very bottom of the slide, it said recommended for this type of a market. A lot of the methods that he uses are going to be basically telling you exactly what to do in a certain market time. Here's what I was talking about a second ago, where it's telling you what the explanation is, the entry price, the percent stop, the ATR stop, the percent target, the ATR target. I think we seriously actually underpriced this thing. It costs about $3.99. As part of coming to the webinar today, it's going to be $299. We're going to give you a money-back guarantee, as we always do, so you can try it out for 30 days. And if you want to take advantage of that offer, you're going to want to mention the Befriend the Trend webinar tonight. You can call our sales team at 800-882-3040. And of course, if I get involved in a project and we spend a couple of years on a project, it's something that I'm going to feel passionate about. But I definitely think this is something that you need to have in your toolbox. So with that being said, I think there's a couple questions. Let me see if I can help answer some questions, or if we need to bring Tom in. I'm going to bring Tom back in for the questions. Anyway, try this out. It's something that we're excited about and we worked hard on, and it's something that you're going to enjoy. And if you don't, well, you're risky to get a 30-day money-back guarantee on it. Oh, you know what? Actually, John, if you want, let me look up, and I'll actually type in the international number for you. I'm sorry about that. I should be more cognizant of that with everybody from where they're at and that kind of stuff. We also do have a web page that I could give you, but you're not going to get the good discount. So let me grab that international phone number. I'll type it in the text for you. If you want to, you can also drop me an email. I'll type that. My email address is just jeffrey.gibby@metastock.com, and I'll have somebody call you. Okay, so in any case, Tom, I'll let you take any questions that come in. No.
Thanks.
That's a one-time cost. Let's pay for that. You own it for life. You don't have to pay for it again next year. So to answer that question, and for those of you that are more technically minded, this is something that's really cool as well. We actually left the code completely open. So if you want to go in and see how we're calculating the values in MetaStock, or if you want to make some tweaks to the formulas, well, I'd recommend you make a copy of it first. And but you're welcome to see what's going on, make adjustments, tweak it. The add-on price is normally $399, John. As part of the webinar today, it's only $299. Okay, I'm gonna go ahead and mute my microphone. I'll be answering the question about the not international phone number in the chat, and I'll give you my email address in case you want me to have somebody phone you.
Hey, thanks, Jeff. I really appreciate it. And I was able to answer most of the questions that came in just by typing them in. So if you asked a question, take a look at the sidebar there. But let me answer a couple that I didn't get to. Paul, you were asking about the 2008 crash. If you go to our website, befriendthetrend.com, and click on our performance tab, you're going to see every trade that we publicly presented to our subscribers listed there, exact entry price, exact exit price, and you're going to see that 2008, it wasn't our best year. we did make money. We've made money every year since we started in 2002, but it was a difficult year for everybody included. The only really great trade in 2008 was shorting at the top and buying back in March 9th or something of 2009. When the S&P hit an intraday low of 666, very nefariously, who would have thought to buy it back then? So it was a difficult market because you had, as everybody knows, you had huge intraday swings, and just when you thought it was going to continue going down short, you'd get this massive swing to the upside, massive short covering. Now, our ETF reversal system did very well during 2008 because it's trained to, it's based on a tick volume price ratio. And when it sees a lot of volume going in one direction, it latches onto that. And then when it reverses to the other side, it latches onto that. So it reverses sometimes every day. In super volatile markets, but usually we're in positions for a week or 2 weeks at a time. So yes, it did quite well in 2008, but some of our swing trade, trend trade positions did not fare as well. But again, overall, we still made money 2008. You just have to be very selective. Let's see, some of you are asking about training. Tom is asking about training. Tom, you really will not need to have much training at all to use MetaStock. There's a great site. Some of you are users, and you go to a website which has video tutorials on how to download it and how to get it up and running and how to click on an exploration and what do you do from there. But you won't have to do any coding. You won't have to do any sort of setup of the system. It's all been done for you. You simply click on the exploration that you're looking for, and if you're not sure which one to click on, there's a very detailed description of each system that tells you sort of the best market to apply it to and what to do from there. And then for each system, you're also going to get, as I said before, exact entry and exit prices, exact stop losses. So really all the thinking has been done for you. Let's see, Big Bubba. I'll let Jeff answer Big Bubba's question. Mike B, can you run the Trend Trading Toolkit using end-of-day data only on MetaStock? Yes, Mike, that is true. There are two expert advisories that drill down into the intraday charts, and to trade those you would need real-time data. I don't know what the price for real-time data is. Jeff can fill you in on that. But if you're going for the end-of-day data, you're going to have full access to all 13 of the explorations and 9 of the 11 expert advisories. So you're really going to get the full package with the end-of-day data. If you're someone who only can access your trading platform and you're doing your research at night, you can't really look at the markets during the trading day, then no problem. You can do that with this add-on for sure. Joel, thank you for the nice compliment about the book. I've just been absolutely floored by people who write in saying, I never understood how to trade until I read that book, and now I get it. And maybe that's my teaching background, but it certainly, I've been very pleased that it's helped a lot of people learn how to trade, how to trade part-time so that they can supplement their income. We've done some amazing things with our trading profits. We sponsor an orphanage in India. We've helped rescue over 20 young children from the sex traffic trade in India and in Thailand. We've just been very blessed to be able to make this extra income. And what I like to do is to help others do the same. So people can get out of debt, they can update their kitchen, they can take their families on a nice vacation, whatever it is that they feel they need to do with the money. Yes, to piggyback on what Jeff mentioned there is a long-short system. I call it the mean reversion system, which is not publicly taught in anything that I've published. It is one that I use in my own personal trading account, and it is, to date, my most profitable system. It's one that is very exciting because you're going to be buying the bottom of sharp downtrends. You're going to be selling short the tops of strong uptrends. And boy, if you don't know how to do that, you can really lose your shirt. But this, I've figured out a way that you're not going to be right every time. And when you're wrong, you use a stop loss to make sure you limit your losses. But when you're right, boy, you can latch on to very, very fast returns. 30, 40, 50% is possible within a week, within a couple of weeks on some of these setups using the mean reversion system. And you don't need to understand it. All you need to do is just click on the mouse, and you're going to get a list, both long and short candidates every trading day that fit those parameters. And these are stocks that are way overextended, and because of their volume pattern, because of their indicator pattern, the reversal is very near, and in many cases it happens the very next day. So I love the mean reversion setup. When it goes wrong, it's miserable, but the good news is it's more right than wrong, and you limit your losses with a stop loss, and you let your winners run, and it's just a lot of fun to trade. So you're going to get that system in the Trend Trading Toolkit. Tom, you asked about the 2 free trading manuals. No, those will come with your 2-week trial to my 3 daily stock pick letters. So that's a separate service from MetaStock. That's my own website. So if you go to befriendthetrend.com and email me from there, or simply email me at drstoxx, DRSTOXX, at befriendthetrend.com. And just say you were in the webinar and you're looking for the free trial, and I'll send you a link to get you set up with that. And once you've signed on for that, then I will email you the 2 trading manuals and give you the access to our website, our members-only website, and you can get up and running tonight for tomorrow's market. Israel, you asked about position sizing. Yes, I have a whole chapter in the first book, Trend Trading for a Living, on how to parse out your capital so that you're not overextending yourself in any one position or any basket of positions. And I go into even more detail in the second book, the Micro Trend Trading book. There I have a kind of a step-by-step slow growth process where you can take even a small account, $4,000 or $5,000, and in a very gradual, methodical way, in a very reasonable way, increase it up to a decent size. I tell you exactly how to do that. You're going to start very small, taking small positions in a small number of stocks, but as you gain more confidence and gain more experience trading, you'll ramp it up from there. Oh, Israel, to get the 1900% return in the trend trade letter, in that particular letter, we hold a maximum of 10 positions. Mostly long, but we also trade shorts as well, and in some bear markets, we're more short than long. And so that 1900% is based on dividing your total capital into 10 equal lots. So you divide if you have a $10,000 account, you would be putting $1,000 into each position. Now, we're not long or short 10 positions all at once all the time. Sometimes we have a cash position sitting on the side, but you'll only put $1,000 into each position, and then you reinvest your profits. So if your $10,000 turns into $20,000, then you're putting $2,000 into each position, and so on. Our cheap stocks letter takes a maximum of 5 positions, and so your capital would be divided into 5. And our ETF reversal trades 6 very popular ETFs, so you would divide your capital into 6. Danny, about the mean reversal setup, you would run that scan at night, or after the close in any case, and that would give you the best setups to trade the next market day. And in most cases, you're going to be entering right at the open. With my broker, with Interactive Brokers, I simply set an order to buy at the open. So I will get the official open price regardless. They always match the shares to the open price. And in most cases, you will also be exiting at the close. And with Interactive Brokers, not the same day. You're going to hang on to these positions 5, 10, 15 days. but you would want to exit at the close once it hits a certain, once it meets its criteria. So Danny, that's another way of saying you don't have to be there when the market opens. If you're off at work, if you get up at 5 o'clock in the morning, as I do, you can put on your trades at 5 o'clock a.m. for the market open, and then you go up to work and let the market do what it needs to do. John, the difference between the trend trade letter and in the trend trade letter, to select those stocks, I do run the expert advisories myself. Not the expert advisories, the explorations in the MetaStock add-on for my short list of stocks. But then I put them through all kinds of tests, both technical and fundamental, to whittle down the best 1 or 2 trading setups for that particular market open for the next market day. And so that's the selection process that I do for my subscribers that MetaStock won't be doing. So MetaStock will give you the short list of stocks that pass through the technical filters, which is a great starting point. And in most cases, like in the case of the mean reversal system, you don't have to do any further testing. You've got a great set of stocks already. But I personally like to do a bit more research, and I drill down into some of the fundamentals, and I look at the story behind the stock, and I look at upcoming corporate events to make sure we're not, stepping into a potential minefield. And then those are the trades that are given to our subscribers in the trend trade letter and the other 2 letters that we have. I should add the ETF reversal letter is a purely mechanical system. So there's no subjectivity or second guessing on that. I get a green signal or a red signal. If it's green, we're long. If it's red, we reverse the long and go short. And we're long or short 100% of the time. And trades are reversed at the market open. Hi, John. Sorry, I don't know the annual return of the trend trade letter. You'd have to amortize 1900%. I would guess it's probably somewhere in the 30% per year on average. I don't know what 11 plus years of 30% return looks like, but it's probably something close to 1900, 2000%. Could be more than that. And keep in mind, John, that the S&P 500 did absolutely nothing for 10 years. Now, in the last year, it's been okay, but from 2002 to 2012, you got 0 return on the S&P 500. We started in 2002, and by 2012, we were up to about 1,700%. So we're certainly outperforming the S&P. Thank you, Israel. Good question about earnings. In the past, I have normally made it a rule to exit a position in the day prior to earnings. Stocks, of course, as everybody knows, normally will run up into earnings on the expectation that the earnings are going to outperform or beat the expectation. And most companies have that expectancy. Not all do, but most do. That all the PR campaign they put out prior to the earnings indicate that, hey, we're doing really well. We've got a great quarter going on. And then the earnings come out, and stocks can implode. And lately, I've been doing a lot of research on whether those the severe overselling, or in some cases overbuying, that take place on the earnings announcement, in many cases turn out to be really excellent points of entry for stocks, either long or short. that's a whole nother system. I don't want to worry about that now. But I've come to a different view of earnings. There are ways, Greg, of looking at a company's past earnings performance and determining some of the analysis around those companies coming from experts that know the companies well, to get a pretty good gauge, not 100%, but a pretty good gauge of whether the company will meet or exceed or fall short of their earnings expectation. And if I'm getting an indicator that it's going to fall short, then yes, I will exit before earnings. But otherwise, I'm inclined to hold, either if they meet, which is usually a neutral event, or if they exceed, which usually ramps up the stock quite a bit. And this is something I learned, this whole system of gauging earnings expectations is something I learned from a man named Len Zacks, who runs Zacks Investment Research. He is an MIT trained mathematician, and he developed a whole system for determining the likelihood of a stock beating or falling short of earnings expectations, and then what happens to price in the outcome. And he determined that is in fact the number one indicator of short-term movement, this earnings expectation game. So I've been incorporating that a bit more. And so in our trend trade letter, in fact, we've been holding through earnings more often than not. And it's worked out pretty well for us, as some of you know. David, yes, it has, HLX does have horizontal resistance, dating at February 14th, and I just need to take a quick look at it here to see whether that's the resistance that it passed through, or whether that is a level that is yet to come. Well, it's trading above the April high, it's trading above the March high, and it's coming into, yeah, you're right, it's coming into the February high at back in mid-February, 25.49. I'm more concerned about the trend line than about a horizontal line. Horizontal lines are, generally speaking, weaker forms of resistance than trend lines, and normally that's a momentum thing. Stock trading up into a horizontal line will have more momentum than a stock reaching all the way up to an uptrending trend line, and so resistance and volume tends to dry up once it hits that. Now stocks that hit a horizontal trend line will sometimes coil up. We have a whole setup based on that. You'll find that in the Trend Trading Toolkit, the coiled spring setup, which finds just those stocks coiling up right at a horizontal trend line. And the expectation is that the prevailing trend will win out and you'll get a nice pop above that. As long as I'm seeing very strong volume accumulation, as you're seeing with HLX, I have no worries about a horizontal trend line. It's the upsloping trend line that has me concerned, and there's plenty of room between where it is and where it should be at the end of the completion of the pattern that we talked about. Danny, not necessarily. What you're going to get with the stock pick newsletters that I offer, you're going to get a focus in the cheap stocks letter on small cap stocks, and a number of these are more speculative stocks, biotech companies that may not have the best fundamentals, but where they've got a good story going behind them. And these are stocks that can really ramp 20, 30, 40%. And then you're also going to get the ETF reversal system, which is, as I said before, a purely mechanical 100% system. It's either green or red every day, every market day. And in neither case are you getting that information from the MetaStock add-on. The MetaStock add-on there will be some duplication between the add-on and the trend trade letter, because I use the MetaStock add-on to create my short list of stocks for that letter. But then I take that short list and I whittle it down through a number of other means, mainly fundamental means, to select the 1 or 2 stocks that we're going to offer each day. And in the Trend Trade letter, you're only going to get maybe 3 or 4 stocks a week, new stocks to trade. In the cheap stocks letter, you might get 3 or 4 or 5 stocks a month. And in the ETF reversal letter, you're going to get reversals in the short-term system happening maybe twice a week. So if you want to be more active in the market, if you really need to have fresh stocks every day, then the MetaStock add-on will enable you to do that. It just gives you more control. So you're the one selecting the stocks rather than trusting someone you don't know, which would be me. All right, Jeff, I'm going to need to wind it up here. I need to put together our newsletters for tomorrow. It's been great talking with everybody, and real pleasure here. Again, if you have any further questions and you want to chat with me, I'm very quick to answer email within 24 hours at least, and you can do that by emailing me at drstoxx, DRSTOXX, at befriendthetrend.com. Or just go to our site, befriendthetrend.com, and click on Contact Us, and you'll come up with a form that you can use to contact me. God bless you, everybody, and we'll see you on the other side of the trade. Thanks.